Thanks for staying with us. We're talking about help available to prospective homeowners. Okay, now you say that, the onus is on the home buyer. But if I go in and I'm trying to get a loan and my real estate agent is telling me, well, just get into this adjustable mortgage, and 3 years from now, when it comes time for that to reset, your house is going to have appreciated and the market will be up. People want to get into those homes. They want to believe what that real estate person was telling them. Isn't that, or mortgage lender? Isn't that the truth?
That is the truth, but you still need to investigate. I mean, wouldn't somebody, what normal logical thinking say, well, what could happen in 3 years? Wouldn't you question those sorts of things? Go on the internet and find out what questions you should ask, because like I said, you don't know what you don't know. So you need to do a little investigating, and you really should interview 3 realtors and see who is going to be there for your needs, who's going to protect your interests, who do you have a good feel for.
Okay. What is your experience been with, what do you tell your lending people as far as what representations they can make to prospective buyers? Can they say, go ahead and get into this arm and you're going to be okay when you come back to, we'll take care of you in 3 years from now?
If you want to stay in this business and you want to continue to do business in this real estate market, you have to represent your clients well. You have to represent your products well. You have to interview your client and find out what is the best fit for them. But one great thing, and a lot of people might not do that, is to encourage their clients to go shopping. If you as a loan officer did not put your best foot forward and provide the best program that you have, and they go shopping and they find a better loan somewhere else, then shame on you. You didn't represent, you didn't provide something to your client that you should have at that particular time.
But you know that there were people who maybe couldn't get loans at other places and went to some lenders and they said, okay, well, we'll get you into this. And then the people are just relieved. The borrowers are just relieved that we were able to get a loan. They're not in a position to shop around. What do they do?
And at that particular time, it's a difficult situation. When there's people involved and there's commissions involved and money, and you're talking about somebody's life, on the loan officer side, on the realtor side, there's going to be some little bit of
greed
and a little bit of working in the gray areas to try to get something done. We're in the business to lend money so that other people can make money, and as far as the bankers go. So the bank wants to make money, we want to make money, and we want to be able to get the client into a home, but at what expense? And that's why when we talk about education and like the HOPE program, education, when they sit down in that 6 to 8 hour class, they're being educated by a disinterested third party, FHA or a HUD-approved counselor that goes through and discuss every step that they're going to go through in this whole process. And they're free to ask any kind of question they want. Well, what is this negative amortization loan? What is this 3-year ARM loan? And what happens after the 3 years? And what if my house goes down? And what part of my payment's going to change? They're allowed to ask those questions, because when you ask those questions and you get the answers from somebody that's not going to be influenced by, am I going to make money on this deal? They're going to be more comfortable, and that's the key. Be comfortable with what you're doing. If you're not comfortable with the answer you got from that person, ask somebody else. I understand that they're going to be happy about that they qualify for a loan, but at what expense?
So if I go through this education program and then I come to Bank of America, do I have a better chance of getting a loan?
The education piece is not going to get you a better loan. The interest rates are not driven by how much education you have. They're risk-based pricing. So your interest rate is going to be based on how much of a risk you are, just like an insurance company for your car. If you have too many accidents, your insurance is going to be a little bit higher. Well, if your credit and your history is not quite there, then expect to pay a little bit more. But there are other programs that are not risk-based price, like your FHA product, that doesn't come into play. The government is there to financially back up that loan, and your interest rate is going to be the same whether your credit score is 560 or 800.
But now those loans are becoming a little bit, the restrictions are tightening up a little bit on those loans as well, aren't they?
They're being a little strict. There's still a great program for zero down. And so those clients that haven't quite saved up that money yet and are still looking for the American dream, they can do that with the FHA product and other first-time homebuyer products with down payment assistance, that home funds, government funds that we have out there.
Okay, we're going to take a break, and when we come back, we'll see if now is the right time, if this is the bottom, and what the future holds for the Las Vegas real estate market. Don't go away.
watching Face to Face with John Ralston, a program presented in partnership with the Las Vegas Sun, Cox Communications, and KLAS TV.